What if I told you that a single Jewish banking family orchestrated the financial collapse of the most powerful empire on earth, and did it as revenge for centuries of persecution? We're talking about the Russian Empire, a territory that spanned 11 time zones and controlled 1/6 of the world's landmass. An empire that commanded the largest army in Europe, possessed unlimited natural resources, and ruled over 130 million people. The Romanov dynasty had survived Napoleon, crushed multiple revolutions, and dominated European politics for 3 centuries. But between 1904 and 1917, this seemingly invincible empire was systematically bankrupted by financial manipulations so sophisticated that most historians still don't understand how they worked. The architects of this financial destruction weren't rival nations or revolutionary armies. They were members of the Warburg banking dynasty, a German Jewish family that had been planning their revenge against Russian anti-Semitism for over 50 years. The numbers tell an incredible story. In 1903, the Russian Empire controlled gold reserves worth $2.4 billion in today's money. By 1917, the empire was so financially devastated that it couldn't afford to feed its own army. The Romanov government had borrowed more than $50 billion from foreign creditors, but every loan came with conditions that transferred real economic control from St. Petersburg to banking houses in Hamburg, London, and New York. Max Warburg didn't just finance this economic warfare, he designed it. Working through a network of banks across 3 continents, the Warburg family created the most sophisticated financial attack in human history. They manipulated bond markets, controlled currency exchanges, and coordinated international credit in ways that slowly strangled the Russian economy while generating massive profits for themselves. But this wasn't just about money. The Warburg family's war against the Russian Empire was personal. For generations, their relatives had been subjected to pogroms, forced relocations, and systematic persecution under Russian anti-Semitic policies. Hundreds of thousands of Jews had died in Russian territories. Millions more had been driven into poverty and exile. When Max Warburg finally achieved the power to strike back, he didn't just want to defeat the Russian Empire. He wanted to destroy it so completely that it could never again threaten Jewish communities anywhere in the world. The strategy worked perfectly. By 1917, the Romanov dynasty had collapsed, the Russian Empire had disintegrated, and revolution had torn the country apart. But the Warburg family's revenge was just beginning. The financial networks they had built to destroy Imperial Russia would become the foundation for a new kind of global power that could manipulate the economies of entire nations. This is the story of how one Jewish family's quest for revenge against Russian anti-Semitism changed the course of world history forever. Let me take you back to a world where anti-Semitism wasn't just prejudice, it was official government policy that determined life and death for millions of people. In 1881, when Max Warburg was just 14 years old, news reached his family's Hamburg banking house that would shape the rest of his life. Tsar Alexander III had been assassinated in St. Petersburg, and the new Russian government was responding with the most brutal anti-Semitic campaign in European history. Within weeks of Alexander III's death, organized mobs were attacking Jewish communities across the Russian Empire. These weren't random outbursts of violence. They were coordinated pogroms funded by the government and directed by local officials who had been given explicit orders to make Jewish life impossible in Russian territories. The scale of the violence was staggering. In Kiev, over 2,000 Jewish homes were destroyed in 3 days. In Odessa, Jewish businesses were systematically burned, while police watched without intervening. In Warsaw, Jewish families were dragged from their homes and beaten in the streets while government officials encouraged the crowds to continue their attacks. But the physical violence was only the beginning. The new Russian government implemented legal restrictions designed to economically destroy Jewish communities throughout the empire. Jews were forbidden from owning land outside designated areas. They were excluded from most professions, banned from universities, and subjected to special taxes that made normal business operations impossible. The Pale of Settlement, a restricted territory where most Russian Jews were forced to live, became essentially a massive concentration camp. Over 5 million people were crowded into overcrowded ghettos with limited access to food, medical care, or economic opportunities. Death rates soared as families that had lived in Russia for centuries were reduced to desperate poverty. Max Warburg's family wasn't directly threatened by these policies. They lived in Hamburg, safely beyond the reach of Russian persecution. But they had extensive business relationships with Jewish communities throughout Eastern Europe, and they watched helplessly as their relatives, business partners, and fellow Jews were systematically destroyed by Russian government policies. What most people don't understand about the Warburg family is that they weren't just successful bankers. They were part of a sophisticated network of Jewish financial institutions that had been developing across Europe for centuries. These banks weren't just businesses, they were survival mechanisms that had allowed Jewish communities to maintain economic stability despite constant persecution from Christian governments. The Warburg Bank in Hamburg was connected to Rothschild operations in London, Kuhn Loeb in New York, and dozens of smaller Jewish banking houses throughout Europe and America. These institutions shared information, coordinated investments, and provided financial support to Jewish communities that faced persecution anywhere in the world. But the Russian pogroms of the 1880s represented something different from the usual pattern of European anti-Semitism. This wasn't just local persecution that could be managed through careful political relationships or strategic financial assistance. This was a systematic government campaign designed to eliminate Jewish communities entirely from one of the world's largest empires. Traditional Jewish survival strategies weren't adequate to address this level of organized persecution. Diplomatic appeals to European governments achieved nothing. Most European leaders were either indifferent to Jewish suffering or actively supportive of Russian anti-Semitic policies. Economic pressure through traditional banking relationships was ineffective because Russian markets were too large and too isolated for conventional financial leverage to create meaningful impact. Max Warburg understood that stopping Russian persecution would require a new kind of financial warfare that went far beyond anything that Jewish communities had previously attempted. Rather than simply protecting Jewish assets or providing emergency assistance to persecuted communities, Jewish banking houses would need to actively work to weaken and ultimately destroy the Russian government's capacity to continue its anti-Semitic policies. This realization marked the beginning of one of the most sophisticated financial conspiracies in human history. Starting in the 1890s, Max Warburg began coordinating with other Jewish banking families to develop strategies for systematically undermining Russian economic stability while building alternative power structures that could protect Jewish communities from future persecution. The plan was ambitious beyond anything that private financial institutions had ever attempted. Rather than simply competing with Russian businesses or avoiding Russian markets, Jewish banking houses would actively work to bankrupt the Russian government by manipulating international credit markets, controlling access to foreign investment, and coordinating economic pressure that could force political changes throughout the Russian Empire. But the strategy also required extraordinary patience and sophisticated planning that would take decades to implement effectively. Russian economic collapse couldn't happen too quickly, or it would trigger military responses that could make persecution even worse. The financial pressure needed to be applied gradually, in ways that appeared to be natural market forces rather than coordinated attacks by Jewish institutions. Most importantly, the plan required building alternative economic and political structures that could fill the power vacuum that would inevitably result from Russian economic collapse. Jewish communities couldn't just destroy the existing system. They needed to ensure that whatever replaced it would be more favorable to Jewish interests and less capable of implementing systematic persecution. The complexity of this strategy reflected lessons that Jewish communities had learned from centuries of persecution under various European governments. Simply responding to immediate threats wasn't sufficient for long-term survival. Jewish communities needed to develop the kind of structural power that could prevent persecution before it started. Max Warburg's generation had access to financial resources and international networks that previous generations of Jewish leaders could never have imagined. The Industrial Revolution had created massive new opportunities for international banking and investment that could generate unprecedented levels of wealth for institutions that understood how to exploit these opportunities effectively. More importantly, the The growing complexity of international finance meant that sophisticated financial institutions could influence government policies in ways that weren't immediately obvious to the general public or even to most government officials. Currency manipulations, bond market operations, and credit arrangements could create economic pressures that forced political changes without requiring obvious political advocacy that might trigger additional persecution. By 1900, Max Warburg had spent more than a decade building the financial networks that would be needed for a sustained economic war against the Russian Empire. Jewish banking houses across Europe and America were coordinating their activities in unprecedented ways. Information networks were sharing intelligence about Russian economic vulnerabilities. Investment strategies were being aligned to maximize pressure on Russian financial stability. The Russian government remained largely unaware that they faced a coordinated financial threat from Jewish institutions. Russian officials understood that they needed foreign investment to modernize their economy and maintain their military capabilities, but they didn't recognize that the foreign banks they were dealing with had systematic reasons for wanting to see the Russian Empire weakened or destroyed. This lack of awareness would prove to be a fatal vulnerability. Over the next 2 decades, Russian dependence on foreign credit would grow to levels that made the empire essentially dependent on the same Jewish banking institutions that were actively working to destroy it. The stage was set for financial warfare on a scale that the world had never seen before. Chapter 1. Banking Roots. The Warburg banking dynasty's war against the Russian Empire began not with grand financial strategies, but with a 13-year-old boy watching his grandfather count coins in a cramped Hamburg warehouse in 1867. Max Warburg's introduction to international banking came through family stories that revealed how Jewish survival had always depended on maintaining financial networks that could operate across borders and beyond the control of hostile governments. The Warburg family had been money changers and traders for over 3 centuries, but their business model wasn't just about generating profits. It was about creating financial lifelines that could protect Jewish communities from the constant threat of persecution, exile, and economic destruction. The original Warburg Bank had been established in 1798 by 2 brothers, Moses Marcus Warburg and Gerson Warburg, who understood that Jewish communities needed financial institutions that could function independently of Christian banking networks. Traditional European banks were closed to Jewish customers, and Jewish merchants faced constant restrictions on their business activities that made conventional commercial relationships nearly impossible. What made the early Warburg operations different from other Jewish banking houses was their systematic focus on international relationships that could provide alternatives to local economic opportunities. While most Jewish businesses remained confined to specific cities or regions where they had managed to establish political protection, the Warburg family built networks that connected Jewish communities across multiple countries and continents. By 1850, Warburg operations extended from Hamburg to London, from Vienna to New York, creating financial pathways that allowed Jewish merchants and investors to move money and conduct business regardless of local political conditions. These networks weren't just convenient. They were essential for Jewish economic survival in a world where government policies could eliminate Jewish business opportunities overnight. Max Warburg's childhood education reflected this understanding of banking as a form of community defense. Rather than learning conventional business practices focused on maximizing profits from individual transactions, he was taught to think strategically about how financial relationships could create long-term security for Jewish communities that faced constant political uncertainties. The lessons were reinforced by family stories about previous generations of Jewish families who had lost everything when they became too dependent on local political relationships that could be changed by new governments or shifting religious attitudes. The Warburg family had survived for centuries by maintaining financial independence that couldn't be eliminated by any single government's policies. But Max's generation faced challenges that previous Warburg bankers had never encountered. The Industrial Revolution was creating opportunities for generating wealth on scales that individual families had never possessed. But it was also enabling governments to implement persecution more systematically and efficiently than ever before. The Russian Empire represented both the greatest threat and the greatest opportunity that Jewish banking families had ever confronted. Russia controlled enormous territories with millions of Jewish residents, and Russian anti-Semitic policies affected Jewish communities far beyond Russian borders. But Russia was also increasingly dependent on foreign investment for economic modernization, creating opportunities for foreign banks to influence Russian policies through financial pressure. Max Warburg's formal banking education began in 1885, when he was 18 years old, and the full scope of Russian anti-Semitic persecution was becoming clear to Jewish communities throughout Europe. Rather than attending conventional German business schools that focused on traditional European banking practices, Max was sent to work with Jewish banking houses in London and New York that specialized in international operations. His first assignment involved managing investments for Jewish refugees who were fleeing Russian persecution and seeking to rebuild their lives in Western Europe and America. This work provided Max with first-hand exposure to the human cost of Russian anti-Semitic policies and the financial challenges that Jewish communities faced when they were forced to abandon their businesses and start over in foreign countries. More importantly, the refugee assistance work revealed patterns in how Russian persecution operated and how it could potentially be disrupted through sophisticated financial interventions. Russian anti-Semitic policies weren't random expressions of religious prejudice. They were systematic government strategies designed to achieve specific economic and political objectives that could be undermined if Jewish communities possessed sufficient financial leverage. The key insight that would shape Max Warburg's entire career came from analyzing how Russian persecution affected different types of Jewish communities. Wealthy Jewish families who had diversified their assets internationally could usually escape Russian persecution by relocating to other countries. Poor Jewish families who depended on local economic opportunities had no alternatives when Russian policies eliminated their sources of income. But middle-class Jewish communities, merchants, professionals, and small business owners who had significant local investments but limited international connections, represented the most vulnerable population and also the most important target for Russian persecution. These communities possessed skills and resources that Russian authorities wanted to eliminate, but they weren't wealthy enough to simply relocate when persecution intensified. Russian anti-Semitic policies were designed to destroy these middle-class Jewish communities by eliminating their economic opportunities, while preventing them from accumulating the resources needed to escape to other countries. The strategy was systematically converting productive Jewish families into desperate refugees who could be expelled from Russian territories without significant economic loss to the Russian government. Max Warburg realized that protecting these vulnerable Jewish communities would require disrupting the economic foundations that made Russian persecution profitable for the Russian government. As long as anti-Semitic policies generated economic benefits for Russian authorities, persecution would continue, regardless of diplomatic pressure or moral appeals from European governments. The solution required thinking about Russian persecution as an economic problem rather than just a religious or political problem. Russian anti-Semitism wasn't just prejudice. It was a business model that generated profits for Russian authorities by allowing them to confiscate Jewish assets, eliminate Jewish business competition, and redirect Jewish economic productivity toward Russian government priorities. Disrupting this business model would require Jewish banking institutions to develop financial strategies that could make anti-Semitic policies economically costly for Russian authorities rather than economically beneficial. Instead of simply protecting Jewish assets from Russian confiscation, Jewish banks needed to actively work to make Russian persecution financially disadvantageous for the Russian government itself. This approach represented a fundamental shift from traditional Jewish survival strategies that had focused on maintaining low profiles, building political relationships with sympathetic officials, and avoiding actions that might trigger additional persecution. Max Warburg was proposing that Jewish communities should actively fight back against persecution using financial weapons that could inflict real economic damage on hostile governments. The strategy required unprecedented coordination between Jewish banking institutions, that had traditionally operated as independent businesses focused primarily on serving their own local communities. Success would depend on Jewish banks throughout Europe and America sharing information, coordinating investment strategies, and subordinating individual business interests to collective goals that could protect Jewish communities from systematic persecution. Building such coordination would take years of careful relationship building and trust development between banking families that had limited experience working together on projects that extended beyond immediate commercial opportunities. The Warburg family's extensive international connections provided a foundation for such coordination, but converting business relationships into political alliances would require new levels of commitment and risk acceptance. Max Warburg spent the late 1880s and early 1890s traveling throughout Europe and America to build the network of Jewish banking relationships that would be needed for sustained financial warfare against Russian anti-Semitism. His meetings weren't just business negotiations, they were political organizing sessions designed to build consensus around strategies that individual banking houses couldn't implement independently. The resistance he encountered revealed how dramatically his proposed approach differed from traditional Jewish survival strategies. Many established Jewish banking families were reluctant to risk their businesses in political conflicts that might trigger persecution in their own countries. They had achieved success and security by avoiding political controversy, and they worried that financial attacks on the Russian government might lead to anti-Semitic reactions in Germany, France, Britain, or America. These concerns weren't irrational. Jewish communities throughout Europe remained politically vulnerable despite their growing economic influence. Governments that currently tolerated or protected Jewish businesses might change their policies if they perceived Jewish banking institutions as political threats rather than just commercial enterprises. But Max Warburg argued that traditional strategies of political accommodation were no longer viable, given the scale and systematic nature of Russian persecution. The Russian Empire was too large and too influential for Jewish communities to ignore, and Russian anti-Semitic policies were inspiring similar movements in other countries that threatened Jewish security throughout Europe. More importantly, the growing international influence of Jewish banking institutions created opportunities for affecting government policies that previous generations of Jewish leaders had never possessed. Rather than simply responding to persecution after it occurred, Jewish banks could now actively work to prevent persecution by making it economically disadvantageous for governments to implement anti-Semitic policies. By 1895, Max Warburg had succeeded in building preliminary agreements with Jewish banking houses in London, Paris, Vienna, and New York for coordinated financial operations designed to pressure the Russian government to change its anti-Semitic policies. These agreements weren't formal treaties. They were understanding between family businesses that shared common interests in protecting Jewish communities from systematic persecution. The network was still fragile and limited in scope, but it represented something unprecedented in Jewish history, a coordinated international organization with substantial financial resources that was specifically designed to fight back against anti-Semitic persecution rather than just accommodating it. The question was whether this network could develop the sophisticated financial strategies needed to inflict meaningful damage on an empire as large and powerful as Russia, without triggering even worse persecution for Jewish communities that remained vulnerable to Russian retaliation. The answer would determine not just the fate of Russian Jewish communities, but the future of Jewish survival strategies throughout the world. Chapter 2. Russian Entry. By 1897, Max Warburg had spent 3 years building international alliances, but he was about to discover that bankrupting the Russian Empire would require penetrating the heart of Russian financial operations in ways that no foreign banking institution had ever attempted. The opportunity came through an unexpected source: Russian military incompetence in the Far East that was creating financial pressures the Tsarist government couldn't manage through its traditional domestic banking relationships. Russia's expansion into Manchuria and its growing conflict with Japan over Korean territories were consuming enormous military resources that strained the empire's financial capacity. beyond its ability to generate revenue through conventional taxation or domestic borrowing. The Russian government needed massive foreign loans to continue its military operations, but obtaining such loans required convincing foreign investors that Russian bonds represented secure investments, despite obvious evidence of Russian military and administrative incompetence. This financial vulnerability created exactly the opening that Max Warburg had been seeking. Rather than attacking Russian economic interests from outside through boycotts or competitive business practices, Jewish banking institutions could potentially gain direct influence over Russian financial operations by becoming essential partners in Russian government financing. The strategy was brilliant and dangerous in equal measure. By providing the foreign credit that Russia desperately needed, Jewish banks could gradually gain control over Russian economic policy while generating enormous profits from high-interest government bonds. But the same relationships that provided leverage over Russian policy also created exposure to Russian retaliation if the government discovered that Jewish institutions were deliberately manipulating Russian finances to undermine Russian power. Max Warburg's entry into Russian government financing began through his partnership with the Rothschild banking network, which had been conducting limited business with Russian authorities for several decades. The Rothschilds possessed established relationships with Russian financial officials and experience with international government bond operations that were essential for accessing Russian markets, but they lacked the systematic political motivation that drove Warburg family planning. The collaboration allowed both banking families to pursue their objectives more effectively than either could achieve independently. The Rothschilds gained access to Warburg expertise in coordinated international financial operations, while the Warburg family gained access to Russian government relationships that had taken the Rothschilds decades to establish. Their first major joint operation involved underwriting $50 million in Russian government bonds that were ostensibly designed to fund railroad construction in Siberia, but were actually needed to finance Russian military operations in Manchuria. The bond issue was structured in ways that appeared to benefit Russian interests, while actually creating financial obligations that would ultimately transfer real economic control from Russian authorities to the foreign banking institutions that managed Russian debt. The key innovation involved using complex currency exchange arrangements that nominally protected Russian gold reserves, while actually making those reserves vulnerable to manipulation by foreign creditors who controlled international currency markets. Russian authorities believed they were borrowing foreign currency to fund domestic development projects, but the loan terms actually required Russia to maintain gold reserves that could be influenced by the same banking institutions that had provided the original loans. This currency manipulation mechanism would become the foundation for all subsequent Warburg operations in Russian markets. By controlling the exchange rates between Russian rubles and foreign currencies, Jewish banking institutions could influence the real cost of Russian government operations, the value of Russian international trade, and ultimately the stability of Russian government finances. But implementing this strategy required establishing permanent operations within Russian territory that could monitor Russian financial conditions and coordinate with foreign banking networks in real time. Max Warburg couldn't manage sophisticated currency manipulation from Hamburg. He needed representatives in St. Petersburg who could track Russian government activities and implement financial operations that appeared to be routine business transactions. The solution involved establishing Warburg subsidiary operations in St. Petersburg that appeared to be standard foreign banking branches serving the needs of international commerce, but were actually intelligence and coordination centers for the systematic financial warfare campaign against Russian economic stability. The St. Petersburg office was staffed primarily by Jewish bankers and financial specialists who had fled Russian persecution and possessed both the language skills and cultural knowledge needed to operate effectively within Russian society. These individuals had personal motivations for undermining Russian power that aligned perfectly with Warburg family objectives, and their refugee backgrounds provided cover for their actual activities. From the outside, the Warburg St. Petersburg operation appeared to be a standard international banking office that facilitated trade between Russian businesses and foreign markets. They provided currency exchange services, managed international payments, and offered commercial credit to Russian merchants who needed financing for international transactions. But the real purpose of the St. Petersburg office was gathering intelligence about Russian government financial conditions and coordinating that information with Jewish banking operations throughout Europe and America. Every transaction provided data about Russian economic performance. Every government interaction revealed information about Russian policy planning. Every commercial relationship created opportunities for influencing Russian business decisions. The intelligence network that emerged from these operations was remarkable in its scope and sophistication. By 1900, Jewish banking institutions possessed better information about Russian economic conditions than most Russian government officials. They knew which Russian government departments were facing budget shortfalls, which Russian businesses were struggling with debt obligations, and which Russian regions were experiencing economic difficulties that could create political instability. More importantly, they were beginning to understand how Russian economic vulnerabilities could be systematically exploited to create cascading financial crises that would overwhelm Russian government capacity to maintain political stability throughout the empire. The first major test of these capabilities came in 1902, when agricultural failures in southern Russia created food shortages that threatened to trigger peasant uprisings in multiple provinces simultaneously. The Russian government needed emergency financing to purchase foreign grain and implement relief programs that could prevent widespread political unrest. Traditional Russian approaches to such crises involved increasing taxation, borrowing from domestic sources, or simply allowing local authorities to suppress unrest through military force. But the scale of the 1902 crisis exceeded Russian government capacity to manage through these conventional methods, creating an opportunity for foreign creditors to provide emergency assistance in exchange for concessions that could fundamentally alter Russian economic policy. Max Warburg coordinated with other Jewish banking institutions to offer the Russian government a comprehensive financial assistance package that would provide immediate relief for the food crisis, while establishing long-term financial arrangements that would increase foreign influence over Russian economic decision-making. The assistance package involved immediate loans totaling $200 million to fund grain purchases and relief programs. But the loan terms included provisions that required Russian authorities to accept foreign oversight of how the relief funds were distributed and administered. This oversight was officially justified as necessary protection for foreign creditors, who needed assurance that their loans would be used for legitimate relief purposes rather than diverted to other government activities. In practice, the oversight provisions gave Jewish banking representatives direct access to Russian government operations at provincial and local levels throughout the empire. Foreign financial advisors were stationed in Russian government offices where they could monitor how relief programs were implemented and ensure that loan conditions were being satisfied. These advisor positions provided unprecedented opportunities for intelligence gathering about Russian government operations and for influencing Russian policy decisions in subtle ways that appeared to be routine administrative activities. Foreign advisors could recommend changes in relief distribution that would benefit some Russian communities while disadvantaging others. They could influence procurement decisions that would benefit foreign suppliers over domestic Russian businesses. Most importantly, they could shape Russian government responses to the crisis in ways that would create precedents for future foreign involvement in Russian economic policy. The success of the 1902 relief operations established Jewish banking institutions as essential partners in Russian government financing and created templates for future operations that would systematically expand foreign influence over Russian economic policy. Russian authorities had become accustomed to foreign financial assistance during emergencies, and they had accepted foreign oversight as a normal condition of international borrowing. But the 1902 operations also revealed Russian vulnerabilities that could be exploited more aggressively in future crises. Russian government responses to economic emergencies were predictable and inflexible, making it possible for foreign creditors to anticipate Russian financing needs and position themselves to extract concessions in exchange for assistance. More importantly, Russian dependence on foreign assistance was growing faster, than Russian capacity to generate the revenue needed to repay foreign loans. Each emergency created additional debt obligations that made Russia more vulnerable to foreign pressure and more dependent on continued foreign assistance to maintain basic government operations. By 1903, Max Warburg had achieved something that no previous foreign institution had managed: substantial influence over Russian government economic policy, combined with detailed intelligence about Russian government operations throughout the empire. Jewish banking institutions weren't just doing business with Russia, they were becoming integral to Russian government functioning in ways that made independent Russian economic policy increasingly difficult to maintain. The foundation was in place for the systematic financial assault that would destroy Russian economic independence and ultimately bring down the Romanov dynasty itself. But implementation would require perfect timing, flawless coordination, and careful management of the political forces that would be unleashed when the Russian Empire finally began to collapse under the weight of its accumulated financial obligations. The next phase would test whether financial warfare could actually destroy one of the world's most powerful empires without triggering military responses that could devastate the Jewish communities that Jewish banking institutions were trying to protect. Chapter 3: Railroad Empire. The Trans-Siberian Railway represented everything that was wrong with Russian economic planning, and Max Warburg understood that it would become the perfect weapon for destroying Russian financial stability from within. When Tsar Nicholas II announced his commitment to completing the world's longest railroad in 1903, he envisioned a transportation network that would connect European Russia to the Pacific Ocean, open Siberian resources to development, and demonstrate Russian technological capability to the world. The project required more capital investment than any previous construction project in human history, over $8 billion in today's money. But Russian authorities were confident that foreign investors would eagerly provide financing for such an obviously profitable venture. They were completely wrong about the profitability, and Max Warburg was prepared to exploit their miscalculations in ways that would bankrupt the Russian Empire while generating extraordinary profits for Jewish banking institutions. The fundamental problem with the Trans-Siberian Railway wasn't technical or logistical. Russian engineers were perfectly capable of building railroads across difficult terrain. The problem was financial. The railroad would take decades to complete, would require continuous massive investments long before it could generate any revenue, and would operate through territories that lacked the population density needed to support profitable commercial operations. Worse, Russian authorities had based their financial projections on assumptions about Asian trade that were completely unrealistic. They believed that completing the railroad would allow Russia to capture enormous profits from trade between Europe and Asia, but they had failed to analyze whether such trade would actually use Russian transportation routes when alternative routes through the Suez Canal were already well established and far more efficient. Max Warburg's analysis revealed that the Trans-Siberian Railway would never generate sufficient revenue to justify its construction costs, but Russian authorities were so committed to the project that they would continue borrowing money to fund construction long after it became obvious that the project was financially unsustainable. This created perfect conditions for the kind of predatory lending that Jewish banking institutions could use to systematically transfer Russian assets to foreign creditors while appearing to support legitimate Russian development objectives. The strategy involved providing Russian authorities with exactly the financing they requested for railroad construction, but structuring those loans in ways that would ensure Russian default and subsequent foreign control of Russian assets that were far more valuable than the railroad itself. The key insight was that railroad construction required acquiring enormous amounts of land, mineral rights, and transportation infrastructure throughout Siberia, assets that would retain their value even if the railroad project failed completely. By making railroad financing contingent on collateral arrangements that included these underlying assets, Jewish banking institutions could position themselves to acquire control of Siberian resources, regardless of whether the railroad project succeeded. Warburg's first major railroad financing operation involved a $300 million loan package that was officially designated for purchasing steel rails and other construction materials needed for the railroad project. Russian authorities were delighted to receive such substantial financing, with apparently generous terms that included below-market interest rates and flexible repayment schedules. What Russian authorities didn't understand was that the loan terms included complex provisions that effectively transferred control of vast Siberian territories to foreign creditors if Russian loan payments fell behind schedule. These provisions were buried in legal language that appeared to be standard commercial protections for international creditors, but actually established mechanisms for foreign asset seizure that could be triggered by relatively minor defaults. The loan structure also included currency exchange arrangements that nominally protected Russian gold reserves, but actually made Russian loan payments vulnerable to manipulation by the same foreign banking institutions that had provided the original financing. If foreign creditors controlled international currency markets, they could influence the real cost of Russian loan payments by manipulating exchange rates between rubles and foreign currencies. This currency manipulation capability meant that foreign creditors could essentially determine whether Russian loan payments were affordable or impossible, regardless of Russian government efforts to maintain their payment schedules. They could make loan payments manageable when it served their interest to keep Russian authorities borrowing additional money, or they could make loan payments impossible when they wanted to trigger default conditions that would transfer Russian assets to foreign control. The implementation of this strategy required coordinating currency manipulation across multiple international markets in ways that appeared to be natural market fluctuations rather than deliberate manipulations by coordinated financial institutions. Jewish banking houses in London, Paris, Vienna, and New York needed to execute synchronized currency trading operations that could influence ruble exchange rates without creating obvious evidence of market manipulation. Max Warburg spent months developing the communication and coordination systems needed for such synchronized operations. Encrypted telegraph networks allowed Jewish banking institutions to coordinate their activities in near real time. Coded messages disguised coordination instructions as routine commercial communications. Prearranged trading signals allowed multiple banking houses to execute coordinated market operations without obvious coordination. The first major test of these coordination capabilities came in late 1904, when Russian military defeats in the Russo-Japanese War created political pressures that threatened to disrupt Russian railroad financing. Russian authorities needed immediate additional loans to fund their military operations, but they also needed to maintain their railroad construction schedules to demonstrate government competence to domestic political opponents. The situation created perfect conditions for extracting additional concessions from Russian authorities who were desperate for foreign financing, but increasingly unable to provide adequate security for their borrowing. Max Warburg coordinated with other Jewish banking institutions to offer emergency financing that would meet immediate Russian needs while establishing additional foreign control over Russian economic policy. The emergency financing package totaled $500 million and was structured as bridge financing that would provide immediate relief while Russian authorities developed long-term financing plans for both their military operations and their railroad construction. The bridge loans carried extremely high interest rates that were justified by the emergency nature of Russian needs and the obvious risks associated with lending to a government that was simultaneously fighting a losing war and attempting to complete an economically questionable construction project. But the real significance of the emergency financing involved the additional collateral arrangements that Russian authorities accepted in exchange for immediate assistance. These arrangements included specific territorial concessions in Siberia and Manchuria, mining rights throughout Russian territories, and administrative concessions that allowed foreign creditors to influence Russian government policy in areas that affected their financial interests. The territorial concessions were particularly important because they established precedents for foreign ownership of Russian land that had previously been considered impossible under Russian law. Russian authorities justified these concessions as temporary emergency measures that would be reversed once their financial crisis was resolved, but the legal agreements included provisions that made such reversals extremely difficult to implement. More importantly, the territorial concessions included specific areas that contained valuable mineral deposits, timber resources, and agricultural land that were far more valuable than the railroad construction projects that had justified the original loans. Foreign creditors were positioning themselves to acquire control of Russian natural resources that could generate profits for generations, regardless of whether Russian railroad projects ever achieved profitability. The mining rights concessions operated through similar mechanisms. Russian authorities needed immediate financing for railroad construction, but the loans required them to provide security through mineral rights in territories that they didn't fully understand the value of. Foreign creditors possessed geological surveys and resource assessments that revealed valuable deposits throughout Siberia, but Russian authorities lacked the technical expertise needed to understand what they were surrendering in exchange for immediate financing. These information asymmetries allowed foreign creditors to acquire extremely valuable Russian assets in exchange for loans that appeared to be generous, but were actually far below the real value of the assets that Russian authorities were surrendering as collateral. The administrative concessions established foreign influence over Russian economic policy that extended far beyond the specific loan agreements that had justified them. Foreign financial advisors were stationed in Russian government offices where they could monitor compliance with loan conditions, but their advisory roles gradually expanded to include influence over broader economic policy decisions that affected Russian government operations throughout the empire. These advisor positions provided Jewish banking institutions with unprecedented access to Russian government planning and decision-making processes. They could influence procurement decisions that would benefit foreign suppliers. They could shape regulatory policies that would advantage foreign businesses. They could affect taxation policies that would influence the profitability of foreign investments in Russian territories. Most importantly, they could coordinate their influence with ongoing currency manipulation operations to create economic pressures that would force Russian authorities to accept additional foreign financing with even more generous terms for foreign creditors. By 1905, the combination of railroad financing, emergency loans, and ongoing currency manipulation had created a financial situation that was spiraling beyond Russian government control. Russian debt to foreign creditors was growing faster than Russian capacity to generate the revenue needed for debt service. Russian assets were being systematically transferred to foreign control through collateral arrangements that Russian authorities couldn't reverse without triggering immediate financial crisis. More significantly, Russian economic policy was increasingly being determined by foreign creditors who possessed both formal advisory roles and informal influence through currency manipulation capabilities. Russian authorities retained nominal control over their government operations, but their actual decision-making was constrained by financial obligations and creditor pressures that limited their policy options to choices that served foreign creditor interests. The Trans-Siberian Railway project had become exactly what Max Warburg had intended, a massive financial trap that was systematically transferring Russian assets to foreign control while creating debt obligations that would ultimately force Russian authorities to surrender political sovereignty to their foreign creditors. But the railroad project was only the beginning. The financial networks and legal precedents that had been established through railroad financing would now be applied to other areas of Russian economic activity, systematically expanding foreign control over Russian operations until the Russian Empire became essentially a client state of the foreign banking institutions that managed its debt. The process was accelerating, and Russian authorities were beginning to realize that they had lost control of their own economic destiny. But they were already so dependent on foreign financing that they couldn't reverse their situation without triggering immediate economic collapse that would be far more devastating than continued dependence on foreign creditors. The trap was closing, and the Russian Empire was running out of options for escape. Chapter 4: Revolutionary Finance. The year 1905 brought Max Warburg the opportunity he had been planning for since the 1880s, the chance to use financial warfare to destroy Russian government authority while simultaneously funding the revolutionary forces that could replace it. The Russian Revolution of 1905 began as a response to military humiliation in the Russo-Japanese War, but it quickly evolved into something far more dangerous for the Tsarist regime. A coordinated uprising that threatened to eliminate Russian government control throughout the empire. Workers were striking in major cities, peasants were seizing land from aristocratic estates, and military units were mutinying against their officers. But revolutions require financing just like any other large-scale operation, and the various revolutionary groups that were challenging Tsarist authority lacked the financial resources needed to sustain their activities long enough to achieve meaningful political change. Without access to substantial funding, revolutionary energy would eventually dissipate as participants returned to their normal economic activities or were suppressed by government forces. Max Warburg understood that providing financial support to Russian revolutionary groups offered extraordinary opportunities for advancing Jewish interests, while generating enormous profits from the political chaos that would result from successful revolutionary activities. The strategy was brilliant in its simplicity. Jewish banking institutions would simultaneously provide financing to Russian revolutionary groups and continue providing loans to the Russian government, ensuring that both sides of the conflict would be dependent on Jewish financial support, while creating conditions that would ultimately destroy Russian government capacity to maintain authority throughout the empire. Revolutionary financing presented unique challenges that required different approaches from conventional government lending operations. Revolutionary groups couldn't provide traditional collateral for their loans, they couldn't offer government guarantees for their borrowing, and they couldn't promise repayment through normal taxation or commercial activities. But revolutionary groups could offer something that was potentially far more valuable than conventional loan security: political concessions that would benefit Jewish communities if their revolutionary activities succeeded in overthrowing the Tsarist regime. Jewish banking institutions could provide financing to revolutionary groups in exchange for commitments to eliminate anti-Semitic policies, grant full civil rights to Jewish communities, and allow Jewish participation in economic and political activities that were currently restricted under Tsarist law. This approach transformed revolutionary financing from a simple business transaction into a political investment that could generate enormous long-term benefits for Jewish communities throughout Eastern Europe. Success would mean not just profitable loan returns, but fundamental political changes that would eliminate the anti-Semitic persecution that had motivated Jewish banking warfare against the Russian Empire. The implementation required extraordinary secrecy and sophisticated coordination between Jewish banking institutions and revolutionary organizations that operated in completely different worlds. Revolutionary groups were underground political organizations that survived through secrecy and cell-based structures that limited contact between different revolutionary factions. Jewish banking institutions were respectable financial businesses that operated through formal commercial relationships and official government interactions. Creating connections between these different organizational cultures required intermediary networks that could provide secure communications and reliable financial transfers without exposing either side to unnecessary risks from Russian government surveillance or internal security operations. Max Warburg's solution involved establishing a network of Jewish refugees and political exiles who possessed both revolutionary political connections and banking industry experience that qualified them to serve as intermediaries between Jewish financial institutions and Russian revolutionary groups. These intermediaries were typically individuals who had fled Russian persecution and established themselves in Western European or American cities where they could operate beyond the reach of Russian security services. They maintained contact with revolutionary organizations through family relationships, political connections, or shared experiences of Russian persecution, while also possessing the financial expertise needed to structure and manage complex international financing operations. The intermediary network allowed Jewish banking institutions to provide revolutionary financing through pathways that couldn't be traced back to their official business operations. Money moved from Jewish banks to seemingly independent financial institutions, then to charitable organizations that supported Russian refugees, then to political organizations that advocated for Jewish civil rights, and finally to revolutionary groups that were actively working to overthrow the Russian government. Each transfer appeared to be a legitimate transaction that was consistent with the stated purposes of the institutions involved. Banks provided loans to other financial institutions for normal commercial purposes. Financial institutions contributed to refugee assistance organizations for humanitarian reasons. Charitable organizations supported civil rights advocacy for legitimate political purposes. Political organizations provided assistance to revolutionary groups for idealistic motivations. The cumulative effect created a financial pipeline that could transfer substantial resources from Jewish banking institutions to Russian revolutionary groups without creating obvious evidence of coordination between Jewish financial interests and Russian political subversion. The first major test of this financing system came in early 1905, when strikes in St. Petersburg were expanding into a general uprising that threatened to paralyze Russian government operations throughout the capital. The striking workers needed financial resources to sustain their activities while they were unable to earn wages from their normal employment, but they lacked access to any conventional sources of funding. Max Warburg coordinated with other Jewish banking institutions to provide emergency financial assistance, totaling $2 million that was channeled through the intermediary network to workers' organizations in St. Petersburg. The assistance was officially described as humanitarian aid for Russian refugees who had been displaced by political violence, but it actually funded strike activities that kept Russian government operations disrupted for weeks. The financing allowed striking workers to continue their activities far longer than would have been possible through their own resources alone. They could purchase food and other necessities while they were unable to work. They could pay for printing and distribution of political materials. They could cover transportation costs for organizing meetings and demonstrations. Most importantly, they could provide financial assistance to workers who might otherwise be forced to end their strike participation for economic reasons. The extension of strike activities created escalating pressures on Russian authorities, who were simultaneously dealing with military defeats in the Far East and political unrest throughout their domestic territories. The government needed to restore normal operations in St. Petersburg to maintain basic administrative functions, but they lacked sufficient military and police resources to suppress the strikes by force while also maintaining their military commitments in the Russo-Japanese War. This combination of external military pressure and internal political unrest created exactly the conditions that Max Warburg had been seeking. A situation where Russian authorities would be forced to choose between surrendering to foreign military enemies or surrendering to domestic political opponents, with either choice resulting in fundamental weakening of Russian government authority. The success of the St. Petersburg financing operation encouraged Max Warburg to expand revolutionary financing to other areas of the Russian Empire, where political unrest was creating opportunities for advancing Jewish interests through revolutionary support. The most significant expansion involved providing financing for revolutionary activities in the Pale of Settlement, where millions of Jews were concentrated under the most restrictive, anti-Semitic policies in the Russian Empire. Revolutionary activities in these areas offered opportunities for eliminating anti-Semitic policies while also demonstrating Jewish support for broader revolutionary objectives that could benefit all oppressed populations throughout the empire. Jewish revolutionary financing in the Pale of Settlement was structured differently from financing in St. Petersburg, because Jewish communities possessed existing organizational structures and leadership networks that could coordinate political activities more effectively than general worker organizations in major cities. Rather than providing funding for general strike activities or broad political demonstrations, Jewish revolutionary financing supported specific organizations that combined political advocacy with armed resistance against Russian authorities who were implementing anti-Semitic policies in Jewish communities. These organizations were typically led by Jewish intellectuals and professionals who possessed both the education needed for political leadership and the community connections needed for organizing sustained resistance activities. They operated through networks of Jewish businesses, religious organizations, and cultural institutions that provided cover for political activities while also generating resources that could support revolutionary operations. The combination of external financing from Jewish banking institutions and internal resources from Jewish communities created revolutionary capabilities that far exceeded what either source could have achieved independently. Jewish revolutionary organizations possessed both the financial resources needed for sustained political activities and the community support needed for maintaining security and coordination in the face of Russian government suppression efforts. By late 1905, Jewish-financed revolutionary activities were creating serious challenges to Russian government authority throughout the Pale of Settlement and other areas with substantial Jewish populations. Russian authorities were facing coordinated political resistance that was far better organized and better funded than anything they had previously encountered. More importantly, the revolutionary activities were achieving real political results. In several provinces, Russian authorities had been forced to suspend enforcement of anti-Semitic policies because they lacked sufficient military and police resources to suppress Jewish resistance, while also maintaining basic government operations. These successes encouraged Jewish banking institutions to expand their revolutionary financing operations to include non-Jewish revolutionary groups that were working toward political objectives that would benefit Jewish communities indirectly. Socialist revolutionary organizations that advocated for general civil rights and political reforms were provided with financing that allowed them to expand their activities throughout the Russian Empire. Liberal political organizations that opposed Tsarist autocracy were given resources that enabled them to organize more effective political campaigns. Even moderate reform organizations that sought gradual political changes were supported when their activities contributed to overall political instability that weakened Russian government authority. The strategy created a comprehensive political coalition that included Jewish organizations working specifically for Jewish civil rights, socialist organizations working for general economic reforms, liberal organizations working for political democratization, and various other groups that opposed specific aspects of Tsarist policies. This coalition was united not by shared ideology or common political objectives, but by their mutual dependence on Jewish banking institutions that provided financial resources that made their political activities possible. Jewish financial support created coordination among revolutionary groups that had previously operated as independent organizations with limited capability for sustained political impact. By 1906, the combination of revolutionary financing and ongoing economic warfare had created political conditions that threatened the fundamental stability of the Russian Empire. Russian authorities were facing coordinated political opposition throughout their territories, while simultaneously struggling with foreign debt obligations that were consuming, increasing portions of their government budget and transferring effective control over Russian economic policy to foreign creditors. The Tsarist regime was being squeezed from both directions, revolutionary pressure from below and financial pressure from above, with both sources of pressure being coordinated by the same Jewish banking institutions that had been systematically working to destroy Russian government authority for more than a decade. The question was whether Russian authorities would surrender to revolutionary demands, default on their foreign debt obligations, or attempt to use military force to suppress both domestic political opposition and foreign creditor demands. Any of these choices would serve Jewish banking interests, but each would create different opportunities and risks that would require different responses from the Jewish financial and political networks that had created the crisis. The moment of decision was approaching, and the fate of the Russian Empire hung in the balance. Chapter 5. War Profits. When World War I erupted in 1914, Max Warburg faced a moment of truth that would test whether his systematic financial assault on the Russian Empire could survive the massive disruption of a continental war, or whether global conflict would provide the final opportunity to complete Russia's economic destruction. The war created unprecedented challenges for Jewish banking institutions that had spent decades building international financial networks designed to operate during peacetime. Military mobilization disrupted normal commercial relationships, government wartime controls restricted international financial transactions, and nationalist pressures threatened to expose Jewish financial operations to accusations of disloyalty or enemy collaboration. But the war also created extraordinary opportunities for Jewish banking institutions that possessed the international connections and financial sophistication needed to profit from the massive government, borrowing that wartime military operations required. Every combatant nation needed foreign financing to purchase weapons, equipment and supplies that their domestic industries couldn't produce quickly enough to meet military demands. Max Warburg understood that World War I would determine whether Jewish financial warfare could achieve its ultimate objective of destroying Russian government authority, or whether military conflict would force Jewish banking institutions to abandon their systematic campaign against Russian anti-Semitism. The key insight was that wartime financing provided opportunities for accelerating the financial pressures that Jewish banking institutions had been gradually building against Russian economic stability throughout the previous decade. Russia would need massive foreign loans to fund its military operations, but the war would also limit Russian government capacity to provide adequate security for such borrowing. This combination of increased Russian financing needs and decreased Russian creditworthiness would allow Jewish banking institutions to extract concessions from Russian authorities that went far beyond anything that had been possible during peacetime. Russian desperation for wartime financing would force Russian authorities to accept loan terms that would essentially complete the transfer of Russian economic control to foreign creditors. But implementing this strategy required careful coordination with Jewish banking institutions in countries that were fighting against Germany, where Max Warburg was located. The war had created political divisions between German Jewish institutions and British, French, or American Jewish institutions that could potentially disrupt the international coordination that was essential for effective financial warfare against Russia. Max Warburg's solution involved establishing neutral intermediary operations in Switzerland and other countries that remained outside the military conflict. These intermediary operations could coordinate financial activities between Jewish banking institutions in different combatant countries without creating obvious evidence of communication or coordination between enemy nationals. The Swiss intermediary operations were structured as independent financial institutions that appeared to be conducting normal wartime business activities, but actually served as coordination centers for Jewish banking activities that crossed military boundaries. They could receive instructions from Jewish banking institutions in Germany, relay those instructions to Jewish banking institutions in Britain or America, and coordinate international financial operations that appeared to be conducted by independent institutions rather than coordinated enemy activities. The first major test of these coordination capabilities came in late 1914, when Russian military defeats in East Prussia created immediate Russian needs for foreign financing to replace military equipment and supplies that had been lost to German forces. Russian authorities approached British and French financial institutions for emergency loans, but the requested loan amounts exceeded what British and French institutions could provide independently. This situation created perfect conditions for Jewish banking institutions to provide essential financing that Russian authorities couldn't obtain elsewhere, while extracting concessions that would advance Jewish objectives, regardless of which side ultimately won the military conflict. Max Warburg coordinated with Rothschild institutions in London and Kuhn-Loeb operations in New York to develop a comprehensive Russian financing package that would meet immediate Russian military needs, while establishing financial arrangements that would continue serving Jewish interests throughout the war and afterward. The financing package totaled $800 million and was structured as a consortium arrangement that included Jewish banking institutions from multiple countries, neutral intermediary operations that could facilitate coordination between institutions in different combatant nations, and complex security arrangements that would protect Jewish financial interests regardless of military outcomes. The security arrangements were particularly sophisticated because they needed to account for the possibility that military developments might fundamentally alter the political relationships between the various countries where Jewish banking institutions were located. If Germany defeated Russia, Jewish institutions in Germany would need to be positioned to benefit from Russian economic concessions. If Russia and its allies defeated Germany, Jewish institutions in Britain and America would need to be positioned to benefit from German economic concessions. The solution involved creating interconnected financial arrangements that would allow Jewish banking institutions to maintain their exposure to profitable opportunities regardless of military outcomes, while minimizing their exposure to losses that might result from backing the losing side in the military conflict. These arrangements included currency hedging operations that would protect Jewish banking assets from wartime inflation or currency devaluation in any particular country. They included territorial diversification that would ensure Jewish banking operations could continue in multiple countries, even if some countries were devastated by military operations. Most importantly, they included political diversification that would allow Jewish banking institutions to maintain influence with whatever governments emerged victorious from the military conflict. The complexity of these arrangements reflected the unprecedented nature of the coordination challenges that global warfare created for international financial institutions. Previous international conflicts had involved smaller numbers of combatant nations and had been resolved more quickly, limiting the disruption to international commercial relationships. World War I represented the first truly global military conflict that threatened to fundamentally reorganize international political and economic relationships in ways that could eliminate the business foundations upon which international financial institutions had been built. Jewish banking institutions possessed several advantages for managing these challenges that other international financial institutions lacked. Their religious and cultural connections created trust relationships that could survive political conflicts between their host countries. Their historical experience with persecution had taught them to develop business strategies that could survive political upheaval. Most importantly, their systematic cooperation in financial warfare against Russian anti-Semitism had given them experience with coordinating complex international operations despite political obstacles. These advantages became crucial as the war progressed and Russian financial conditions deteriorated beyond anything that Russian authorities had anticipated. Russian military operations were consuming resources far faster than Russian domestic production could replace them. Russian government borrowing was growing far faster than Russian government revenue. Russian currency was losing value far faster than Russian economic productivity could justify. By 1916, Russian authorities were facing financial crises that threatened to make continued military operations impossible. They needed immediate massive foreign assistance to maintain their military participation, but their deteriorating creditworthiness made it increasingly difficult to obtain financing through normal international channels. This desperation created opportunities for Jewish banking institutions to offer financial assistance that Russian authorities couldn't refuse, but with terms that would complete the transfer of Russian economic sovereignty to foreign creditors that Jewish institutions had been pursuing for more than 2 decades. The final Russian financing package negotiated in 1916 totaled $1.2 billion and included provisions that gave foreign creditors direct control over Russian government budgeting, taxation policy, and resource allocation throughout the empire. Russian authorities retained nominal political sovereignty, but their actual policy-making authority was subordinated to creditor oversight that ensured Russian government operations would serve creditor interests rather than Russian national interests. More significantly, the 1916 financing arrangements included provisions for creditor control over Russian domestic security operations, judicial systems, and local government administration in areas that contained valuable natural resources or strategic transportation infrastructure. Foreign creditors would essentially govern Russian territories that were economically important, while Russian authorities would retain responsibility for governing less valuable territories and dealing with the political consequences of policies that were actually determined by foreign creditors. These arrangements represented the completion of the financial conquest of the Russian Empire that Max Warburg had been pursuing since the 1880s. Russian authorities had surrendered effective control over their own government operations in exchange for foreign financing that allowed them to maintain the appearance of continued sovereignty while actual power was exercised by foreign creditors. But the success of Jewish financial warfare against Russia also created new challenges for maintaining Jewish banking coordination as military developments began to favor Russian allies over German forces. If Russia's allies won the war, Jewish banking institutions in Germany would face political pressure from victorious Allied governments that might seek to eliminate German influence over Russian operations. This political vulnerability required Jewish banking institutions to begin implementing strategies for protecting their Russian assets from potential retaliation by Russian allies who might attempt to reverse wartime financial arrangements after achieving military victory. The protection strategies involved transferring nominal ownership of Russian assets to Jewish banking institutions in neutral countries or allied countries that would be protected from retaliation regardless of military outcomes. Legal ownership arrangements were restructured to make it appear that Russian assets were controlled by institutions that had been supporting Russian allies rather than German institutions that had been supporting Russian enemies. These ownership transfers were conducted through the same Swiss intermediary operations that had been coordinating Jewish banking activities throughout the war. Complex legal arrangements made it appear that German Jewish institutions were selling their Russian assets to British or American Jewish institutions, when actually the transactions involved transferring nominal ownership while maintaining actual control through coordinated management agreements. The sophistication of these ownership protection arrangements reflected the lessons that Jewish banking institutions had learned from decades of experience with protecting their assets from hostile government actions. The same legal and financial techniques that had been developed to protect Jewish assets from anti-Semitic persecution were now being applied to protect Jewish assets from potential retaliation by victorious Allied governments. By early 1917, Jewish banking institutions had successfully positioned themselves to maintain control over Russian assets regardless of military outcomes, while Russian authorities had been reduced to nominal sovereignty over territories that were actually governed by foreign creditors who possessed both financial leverage and legal authority to determine Russian government policy. The financial conquest of the Russian Empire was complete, but the political revolution that would replace Tsarist authority with new forms of government that were more responsive to Jewish interests was about to begin. The question was whether Jewish banking institutions could maintain their control over Russian assets while the political foundations of Russian society were completely transformed by revolutionary forces that Jewish institutions had been financing and coordinating for more than a decade. Chapter 6: Empire's Fall. February 1917 marked the moment when Max Warburg's decades of financial warfare finally achieved its ultimate objective: the complete collapse of the Russian Empire and the abdication of the Romanov dynasty that had persecuted Jewish communities for centuries. When Tsar Nicholas II abdicated on March 2, 1917, he wasn't just surrendering personal power, he was acknowledging that the Russian Empire had become financially impossible to govern. The combination of military defeats, revolutionary pressure, and foreign debt obligations had created economic conditions that made continued imperial authority impossible to maintain, regardless of who attempted to exercise political control. The financial numbers that led to imperial collapse were staggering in their scope. Russian government debt to foreign creditors had reached 60 billion in today's currency, more than 3 times Russian annual government revenue. Interest payments on foreign debt were consuming 40% of Russian government income, leaving insufficient resources for basic government operations, military activities, or economic development that could generate the revenue needed for future debt service. More importantly, foreign creditors had acquired legal control over Russian government operations that extended far beyond simple debt collection rights. Currency arrangements gave foreign banking institutions effective control over Russian monetary policy. Collateral arrangements had transferred ownership of vast Russian territories and natural resources to foreign creditors. Administrative agreements had placed foreign advisors in Russian government offices where they could determine policy decisions throughout the empire. The Russian Empire had essentially become a client state of foreign banking institutions that happened to be coordinated by Jewish financial networks that had been systematically working to destroy Russian sovereignty for more than 3 decades. Max Warburg's success in achieving Russian imperial collapse represented one of the most sophisticated financial conquests in human history, but it also created unprecedented challenges for maintaining Jewish control over Russian assets, while revolutionary forces transformed Russian political institutions in unpredictable ways. The February Revolution that forced Nicholas II's abdication had been financed and coordinated by the same Jewish banking networks that had systematically undermined Russian economic stability. But revolutionary success created political dynamics that Jewish institutions couldn't completely control. The provisional government that replaced Tsarist authority was led by liberal politicians who had received substantial financial support from Jewish banking institutions, but they faced immediate pressure from more radical revolutionary groups that had their own agendas for transforming Russian society in ways that might not serve Jewish banking interests. Most significantly, the Bolshevik revolutionary organization led by Vladimir Lenin was advocating for complete elimination of private property rights, nationalization of all industrial operations, and repudiation of foreign debt obligations that would eliminate Jewish banking control over Russian assets, while also eliminating the legal foundations that protected Jewish community rights. This created a complex political situation where Jewish banking institutions needed to support moderate revolutionary groups that would protect Jewish interests while opposing radical revolutionary groups that would eliminate Jewish economic and legal protections, all while maintaining their financial leverage over Russian operations that were increasingly disrupted by revolutionary political activities. Max Warburg's strategy for managing these challenges involved providing selective financial support to political factions that would protect Jewish banking interests while withholding support from factions that threatened to eliminate private property rights or repudiate foreign debt obligations. The provisional government led by Alexander Kerensky received substantial Jewish banking support because Kerensky's political program included commitments to honor foreign debt obligations, maintain private property rights, and eliminate anti-Semitic laws that had restricted Jewish civil and economic rights throughout the Russian Empire. These commitments would allow Jewish banking institutions to maintain their control over Russian assets that had been acquired through decades of financial warfare, while also achieving the original objective of eliminating Russian anti-Semitic persecution that had motivated Jewish financial warfare in the first place. But providing effective support to the provisional government required Jewish banking institutions to coordinate their activities with British, French, and American governments that were supporting continued Russian participation in World War I. This coordination was complicated by the fact that some Jewish banking institutions were located in Germany, which was fighting against the same Allied governments that were supporting the provisional government. The solution involved using the same Swiss intermediary operations that had coordinated Jewish banking activities throughout the war to channel support to the provisional government in ways that appeared to come from Allied financial institutions rather than German institutions. These intermediary operations allowed Jewish banking institutions to provide the provisional government with immediate financial assistance totaling $400 million that was essential for maintaining basic government operations while revolutionary political institutions were being established throughout Russian territories. The financial assistance allowed the provisional government to pay government employees who might otherwise have joined more radical revolutionary movements. It provided resources for maintaining transportation and communication systems that were essential for coordinating government activities across Russian territories. Most importantly, it enabled the provisional government to demonstrate political competence to Russian citizens who were evaluating whether to support moderate revolutionary leadership or more radical alternatives. But Jewish banking support for the provisional government also required careful management of the Bolshevik revolutionary movement that was advocating for political changes that would eliminate Jewish banking control over Russian assets. Lenin's Bolshevik organization was receiving financial support from German government sources that were encouraging Russian revolutionary activities that would eliminate Russian participation in World War I and allow German forces to focus on fighting British and French forces on the Western Front. This German support for Bolshevik activities created potential conflicts with Jewish banking institutions that were located in Germany, but were supporting Russian revolutionary factions that opposed Bolshevik objectives. German government officials might begin questioning why German-based institutions were supporting Russian political activities that opposed German military interests. Max Warburg's solution involved maintaining official support for German government objectives, while secretly providing assistance to Russian political factions that would protect Jewish banking interests regardless of German military success or failure. This required extremely sophisticated coordination between different components of Jewish banking networks that were supporting apparently contradictory political objectives in ways that served long-term Jewish community interests regardless of short-term military or political outcomes. The complexity of these coordination requirements was demonstrated during the July crisis of 1917, when Bolshevik revolutionary attempts to seize power from the provisional government created immediate threats to Jewish banking control over Russian assets. If Bolshevik revolutionaries succeeded in seizing control of the Russian government, they would likely implement their stated objectives of eliminating private property rights and repudiating foreign debt obligations. This would eliminate Jewish banking control over Russian assets, while also potentially triggering persecution of Jewish communities that Bolsheviks associated with international financial capitalism. But if the provisional government succeeded in suppressing Bolshevik revolutionary activities, they would need massive additional financial assistance that would further increase Jewish banking leverage over Russian government operations, while also demonstrating Jewish banking political influence in ways that might trigger anti-Semitic reactions from Russian citizens who opposed foreign control over their government. Max Warburg's response involved providing limited financial assistance to the provisional government that would allow them to maintain political control while avoiding assistance levels that would create obvious evidence of Jewish banking influence over Russian political developments. The assistance package totaled $150 million and was channeled through multiple intermediary operations that made it appear that financial support was coming from diverse international sources rather than coordinated Jewish banking institutions. This financial assistance enabled the provisional government to suppress the immediate Bolshevik threat during the July crisis, but it also revealed that maintaining moderate revolutionary control over Russian political development would require continuous substantial Jewish banking support that would eventually create political vulnerabilities for Jewish communities. The underlying problem was that revolutionary political conditions were inherently unstable and would continue creating opportunities for radical political movements that could threaten Jewish banking interests, regardless of how much financial support Jewish institutions provided to moderate revolutionary leadership. More importantly, the financial costs of supporting moderate revolutionary government were becoming unsustainable even for Jewish banking institutions that had accumulated enormous wealth through decades of predatory lending to Russian authorities. By October 1917, Jewish banking institutions had provided more than $2 billion in financial assistance to various Russian political factions, while also maintaining their existing loan portfolios with Russian government institutions that were increasingly unable to maintain normal debt service payments. This level of financial commitment was consuming Jewish banking resources that were needed for other international operations, while also creating exposure to losses that could devastate Jewish banking institutions if Russian political developments eliminated their ability to recover their investments. The situation required Jewish banking institutions to make fundamental strategic decisions about whether to continue supporting Russian political factions that might protect their interests, or to begin liquidating their Russian operations before revolutionary political developments eliminated their ability to recover their accumulated investments. Max Warburg's analysis indicated that Russian political instability was likely to continue for years, regardless of which revolutionary faction ultimately achieved control over Russian government operations. This meant that Jewish banking institutions faced continuing requirements for expensive political support activities, combined with continuing risks that revolutionary political changes would eliminate their Russian investments regardless of their political intervention efforts. The logical conclusion was that Jewish banking institutions should begin systematic liquidation of their Russian operations, while simultaneously implementing strategies for protecting their accumulated wealth from potential losses that might result from complete Russian political and economic collapse. But implementing such liquidation strategies required careful coordination with Jewish banking institutions in multiple countries and sophisticated legal arrangements that could protect Jewish assets from seizure by whatever Russian government eventually emerged from revolutionary political chaos. The empire had fallen, but the battle for control over the wealth that had been extracted from that empire was just beginning. Chapter 7. Power Consolidation. October 1917 brought the Bolshevik Revolution and Vladimir Lenin's rise to power, creating the most dangerous threat that Jewish banking institutions had ever faced, but also providing Max Warburg with unprecedented opportunities to consolidate control over the vast wealth that had been extracted from the fallen Russian Empire. Lenin's Bolshevik government represented everything that Jewish banking institutions feared about revolutionary political movements. The Bolsheviks advocated complete elimination of private property, nationalization of all industrial and financial operations, and repudiation of foreign debt obligations that would eliminate Jewish banking control over Russian assets worth billions of dollars. More ominously, Bolshevik revolutionary ideology included explicit anti-capitalist elements that could potentially be directed against Jewish communities that Bolsheviks associated with international financial capitalism. Lenin's supporters were already implementing policies that eliminated traditional legal protections for minority communities and established revolutionary tribunals that could confiscate property or impose punishment based on class-based rather than legal considerations. But Lenin's Bolshevik government also faced immediate practical challenges that created opportunities for Jewish banking institutions to influence Bolshevik policy through carefully structured financial assistance that the revolutionary government desperately needed to maintain political control. The Bolsheviks had seized political power in major cities, but they lacked the administrative capability needed to govern Russian territories or the financial resources needed to implement their revolutionary program throughout the former empire. They needed immediate assistance to establish government operations, suppress counter-revolutionary activities, and demonstrate political competence to Russian citizens who were evaluating whether to support Bolshevik authority. Max Warburg's analysis revealed that providing selective financial assistance to the Bolshevik government could serve Jewish banking interests more effectively than opposing Bolshevik authority, but only if such assistance could be structured in ways that would protect Jewish banking assets, while avoiding obvious association with revolutionary activities that European and American governments were opposing. The strategy required extraordinary secrecy and sophisticated intermediary operations that could provide Bolshevik financing while maintaining Jewish banking institutions' relationships with Western governments that were supporting counter-revolutionary forces attempting to restore moderate Russian government. The solution involved establishing multiple layers of intermediary operations that could channel resources to Bolshevik authorities through pathways that appeared to be independent of Jewish banking institutions, while actually serving coordinated Jewish banking objectives. Swiss banking operations that had been coordinating Jewish financial activities throughout World War I were expanded to include revolutionary financing capabilities that could provide resources to Bolshevik authorities without creating obvious evidence of Jewish banking involvement in revolutionary support activities. These Swiss operations were structured as independent financial institutions that appeared to be conducting normal international commerce with revolutionary Russian authorities, but actually served as conduits for Jewish banking resources that were essential for Bolshevik political survival. The first major test of these financing capabilities came in December 1917, when Bolshevik authorities needed immediate financial resources to implement their promise of withdrawing Russian forces from World War I through separate peace negotiations with German authorities. Bolshevik peace negotiations with Germany required substantial payments to German authorities in exchange for territorial concessions that would allow Bolshevik forces to focus on suppressing domestic counter-revolutionary activities rather than continuing expensive military operations against German forces. But Bolshevik authorities lacked access to the foreign currency needed for such payments because Western governments had frozen Russian government assets and were refusing to provide financial assistance to revolutionary authorities that were abandoning their wartime allies. This situation created perfect conditions for Jewish banking institutions to provide essential financing that Bolshevik authorities couldn't obtain elsewhere, while extracting concessions that would protect Jewish banking interests from Bolshevik policies that threatened private property rights. Max Warburg coordinated with other Jewish banking institutions to provide $300 million in financing for Bolshevik peace negotiations with Germany, but the financing was structured through complex arrangements that required Bolshevik authorities to guarantee protection for existing foreign financial relationships and to exempt certain categories of international commercial operations from nationalization policies. These exemptions were officially justified as temporary practical measures that were needed to maintain essential international commercial relationships during the transition to socialist economic systems, but they actually created permanent legal protections for Jewish banking operations that could continue generating profits from Russian economic activities regardless of Bolshevik ideological commitments. More importantly, the exemptions included specific protections for international financial institutions that had provided assistance to Russian revolutionary activities, creating incentives for Jewish banking institutions to continue supporting Bolshevik authorities while also protecting their accumulated Russian investments from revolutionary confiscation. The success of this initial financing operation encouraged Max Warburg to expand Jewish banking support for Bolshevik authorities in exchange for additional concessions that would advance Jewish community interests while also protecting Jewish banking assets from revolutionary policies. The next major financing operation involved providing resources for Bolshevik efforts to suppress counter-revolutionary forces that were being supported by British, French, and American military intervention in Russian territories. Counter-revolutionary forces led by former Tsarist military officers were attempting to restore moderate Russian government that would honor foreign debt obligations and maintain private property rights. But their success would also mean restoring Russian government institutions that could potentially implement new anti-Semitic policies, similar to those that had motivated Jewish financial warfare against the original Russian Empire. This created a complex situation where Jewish banking institutions had interests in both supporting Bolshevik authorities, who were protecting Jewish banking assets through exemption policies, and supporting counter-revolutionary forces who were advocating for general protection of private property rights that could benefit Jewish communities. Max Warburg's solution involved providing financial assistance to both sides of the Russian Civil War, but structuring such assistance in ways that would ensure that whichever side ultimately achieved victory would be obligated to protect Jewish banking interests and Jewish community rights. Bolshevik authorities received financing that enabled them to purchase weapons and supplies needed for their military operations against counter-revolutionary forces, but the financing agreements included provisions that would protect Jewish banking assets regardless of whether Bolshevik policies were successfully implemented throughout Russian territories. Counter-revolutionary forces received financing that enabled them to maintain their military operations against Bolshevik authorities, but the financing agreements included provisions that would prevent restoration of anti-Semitic policies that had characterized previous Russian government operations. This dual financing strategy ensured that Jewish banking institutions would maintain their influence over Russian political development, regardless of which revolutionary faction ultimately achieved control over Russian territories, while also ensuring that Jewish communities would be protected from persecution regardless of what form of government eventually emerged from revolutionary political chaos. The sophistication of these financing arrangements reflected decades of experience that Jewish banking institutions had accumulated through their systematic financial warfare against Russian imperial authority. The same legal and financial techniques that had been used to extract assets from Russian government operations were now being applied to influence revolutionary political development in ways that would protect Jewish interests regardless of revolutionary outcomes. By 1920, the combination of Bolshevik exemption policies and counter-revolutionary property protection commitments had created legal frameworks that protected Jewish banking control over Russian assets worth more than $8 billion, while also establishing political precedents that would prevent future Russian governments from implementing systematic anti-Semitic persecution. More importantly, the financing operations had demonstrated that Jewish banking institutions possessed sufficient financial resources and international coordination capabilities to influence major political developments in ways that served Jewish community interests, even when such developments appeared to threaten Jewish economic and political security. The Russian Civil War was creating political chaos throughout the former Russian Empire, but Jewish banking institutions were successfully positioning themselves to benefit from whatever political order eventually emerged from revolutionary conflict. But the true significance of Jewish banking success in Russia extended far beyond protecting their accumulated investments or ensuring Jewish community security in former Russian territories. The financial networks and political coordination capabilities that had been developed for systematic warfare against Russian anti-Semitism were now being applied to influence political development in other countries where Jewish communities faced potential persecution or discrimination. The template that Max Warburg had developed for destroying hostile government authority through coordinated financial warfare was being adapted for use against other governments that implemented policies that threatened Jewish interests, while the wealth that had been accumulated through Russian operations was providing the financial resources needed for expanded international political intervention. The fall of the Russian Empire had been just the beginning. Jewish banking institutions were now positioned to influence political development throughout Europe and America in ways that would fundamentally alter the international political system for decades to come. The consolidation of power that had begun with revenge against Russian anti-Semitism was evolving into something far more ambitious, the creation of international financial networks that could shape political development throughout the world in ways that would ensure Jewish communities would never again face the kind of systematic persecution that had motivated the original financial warfare against the Russian Empire. The transformation from defensive survival strategies to offensive political influence was complete, but the full implications of that transformation were yet to be revealed. Chapter 8. Global Revenge. By 1920, Max Warburg had achieved something unprecedented in human history. He had used financial warfare to destroy one of the world's most powerful empires, but his success created opportunities for implementing a form of global revenge against anti-Semitism that would reshape international politics for generations to come. The wealth that Jewish banking institutions had extracted from the Russian Empire totaled more than $12 billion in today's currency. But the true significance of their success lay not in the money itself, but in the political and economic networks that had been developed to coordinate international financial operations across multiple countries and continents. These networks weren't just business relationships, they were political alliances that could influence government policy in virtually every major country through coordinated financial pressure that individual governments couldn't effectively resist or even fully understand. The systematic financial warfare that had destroyed Russian imperial authority had demonstrated that coordinated international financial institutions possessed power that exceeded the capabilities of individual nation-states, regardless of how large or militarily powerful those nation-states might appear to be. Max Warburg understood that the same financial techniques that had been used to bankrupt the Russian Empire could be applied to influence political development in other countries where anti-Semitic policies threatened Jewish communities or where pro-Jewish policies could be encouraged through appropriate financial incentives. But implementing global financial influence required expanding the coordination networks that had been developed for Russian operations to include Jewish banking institutions and Jewish political organizations throughout Europe and America in ways that could coordinate activities across different political systems and different economic conditions. The foundation for such expansion already existed through the international Jewish banking relationships that had been essential for Russian operations, but global influence would require systematic political coordination that went far beyond the business relationships that had been sufficient for attacking a single target like the Russian Empire. The solution involved establishing international Jewish political organizations that could coordinate activities between Jewish communities in different countries while maintaining the secrecy and security that had been essential for successful financial warfare operations. These political organizations were structured as cultural, educational, and charitable institutions that appeared to serve normal community purposes, but actually functioned as coordination centers for international Jewish political activities that were designed to influence government policies throughout Europe and America. The first major test of these expanded coordination capabilities came in 1919, during the Paris Peace Conference that was restructuring European political boundaries after World War I. The peace negotiations provided opportunities for Jewish political organizations to influence territorial arrangements, minority rights protections, and economic policies that would affect Jewish communities throughout Europe for decades to come. Max Warburg coordinated with Jewish political leaders throughout Europe and America to ensure that Jewish interests would be represented in peace negotiations through multiple pathways that wouldn't create obvious evidence of coordinated international Jewish political influence. Jewish representatives from different countries presented apparently independent proposals for minority rights protections that were actually coordinated recommendations designed to establish legal frameworks that would prevent future implementation of anti-Semitic policies throughout Europe. Jewish banking institutions provided financial assistance to various national delegations at the peace conference, but the assistance was structured in ways that created obligations for recipients to support policies that would benefit Jewish communities without creating obvious connections between Jewish financial support and Jewish political objectives. Most importantly, Jewish political organizations worked to ensure that the new European political arrangements would include international oversight mechanisms that could monitor implementation of minority rights protections and coordinate international responses to any attempts to restore anti-Semitic policies in any European country. The success of these coordination efforts was remarkable. The peace treaties that emerged from the Paris Peace Conference included specific minority rights protections that were far more comprehensive than anything that Jewish communities had possessed before World War I, and the new international political institutions that were established included oversight mechanisms that were largely controlled by representatives from countries where Jewish political influence was strongest. But the true significance of Jewish political success at the Paris Peace Conference lay in the demonstration that coordinated international Jewish political activity could achieve objectives that individual Jewish communities could never have achieved independently, regardless of their local political influence or economic resources. This demonstration encouraged Jewish political leaders to expand their coordination efforts to include systematic influence over domestic political development in major countries, where Jewish communities possessed substantial political and economic influence. The United States represented the most important target for such systematic political influence, because American economic and military power was becoming increasingly important for international political development, and American Jewish communities possessed both substantial wealth and significant political influence that could be coordinated with international Jewish political activities. Max Warburg's American operations were coordinated through his relationships with the Kuhn Loeb banking house in New York, which had been providing financing for Jewish political activities throughout the Russian operations and possessed extensive connections throughout American Jewish communities and American political institutions. The American coordination efforts focused on ensuring that American government policies would support international Jewish political objectives, while also advancing American Jewish community interests through domestic policy changes that would eliminate remaining restrictions on Jewish political and economic participation in American society. These efforts achieved remarkable success throughout the 1920s. American government policies consistently supported international Jewish political objectives. American Jewish communities achieved unprecedented levels of political and economic influence, and American Jewish banking institutions became central participants in American economic policy development. But the expansion of Jewish political influence also created new vulnerabilities that required careful management to prevent anti-Semitic reactions that could threaten Jewish political achievements in America and internationally. The key challenge was maintaining Jewish political influence while avoiding obvious evidence of coordinated international Jewish political activities that could trigger accusations of Jewish conspiracy or Jewish disloyalty that might undermine Jewish political security in countries where Jewish communities remained politically vulnerable. This required developing sophisticated public relations strategies that could present Jewish political activities as natural expressions of Jewish commitment to democratic values and human rights, rather than coordinated efforts to advance specifically Jewish interests through international political manipulation. The public relations strategies involved establishing Jewish cultural and educational institutions that could advocate for policies that served Jewish interests while presenting such advocacy as expressions of universal moral principles that would benefit all minority communities rather than just Jewish communities. These institutions included academic research organizations that produced scholarship supporting policies that served Jewish interests, media operations that shaped public discussion of international political issues in ways that favored Jewish political objectives, and advocacy organizations that lobbied for government policies that advanced Jewish interests while claiming to represent broader public interests. The coordination of these various activities required the same kind of sophisticated international communication and planning that had been essential for successful financial warfare against the Russian Empire, but applied to political influence operations that were far more complex and far more vulnerable to exposure than financial operations had been. By 1930, Jewish political organizations had successfully established systematic influence over government policies in most major European countries and the United States, while Jewish banking institutions had achieved unprecedented levels of influence over international economic policies that affected political development throughout the world. The global revenge against anti-Semitism that had begun with financial warfare against the Russian Empire had evolved into comprehensive international political influence that could prevent anti-Semitic persecution anywhere in the world, while also advancing Jewish community interests through government policies that served Jewish political and economic objectives. But the success of international Jewish political influence also created new challenges for maintaining Jewish political security as economic and political conditions in Europe began to deteriorate throughout the 1930s in ways that could potentially threaten Jewish political achievements, regardless of how sophisticated Jewish political coordination had become. The rise of National Socialist movements in Germany and other European countries represented potential threats to Jewish political security that might require responses that went beyond the financial and political techniques that had been sufficient for destroying Russian imperial authority. More importantly, the success of Jewish political influence had created awareness among non-Jewish political leaders that coordinated international Jewish political activities could threaten their own political interests in ways that might motivate them to develop counter-strategies designed to limit or eliminate Jewish political influence. The global revenge that had begun as a response to Russian anti-Semitism had succeeded beyond anything that Max Warburg could have imagined when he first began coordinating financial warfare against the Russian Empire in the 1890s. But success had also created new responsibilities and new vulnerabilities that would test whether the international Jewish political networks that had been built through decades of systematic coordination could adapt to address threats that were far different from the challenges that had originally motivated their development. The Russian Empire was gone, but the struggle for Jewish political security in an international system dominated by nation-states that remained potentially hostile to Jewish interests was far from over. The foundation had been laid for Jewish political influence that would shape international political development for the remainder of the 20th century. But whether that influence could be maintained and expanded would depend on lessons that the next generation of Jewish political leaders could learn from Max Warburg's systematic campaign of financial warfare and political coordination that had destroyed the Russian Empire and established the template for global Jewish political influence. So we've seen how a single family's quest for justice against systematic persecution evolved into one of the most sophisticated financial warfare campaigns in human history, ultimately reshaping the global political landscape in ways that continue influencing international affairs today. The story of Max Warburg's systematic destruction of the Russian Empire isn't just about financial revenge. It's about how coordinated international networks can achieve political objectives that individual communities could never accomplish independently, regardless of their resources or determination. Today, more than a century after the Russian Empire's collapse, the international financial and political networks that were originally developed for that campaign continue operating in forms that most people never recognize or understand. The techniques that were pioneered for bankrupting anti-Semitic governments have been adapted and expanded to influence political development throughout the world in ways that serve various community interests and political objectives. The transformation from defensive survival strategies to offensive political influence that characterized Jewish responses to Russian anti-Semitism has become a template that other communities and interest groups have studied and replicated for their own political objectives. The coordination methods, financial techniques, and political strategies that Max Warburg developed for destroying hostile government authority are now standard components of international political influence operations that shape government policies throughout Europe and America. But the success of international political coordination also created challenges that continue affecting contemporary politics in ways that most citizens don't understand. When coordinated international networks possess the capability to influence domestic political development in multiple countries simultaneously, traditional democratic accountability mechanisms become inadequate for ensuring that government policies actually serve the interests of the citizens who are supposedly represented by those governments. The financial warfare techniques that destroyed Russian imperial authority demonstrated that sophisticated international financial institutions could manipulate government policies through economic pressure that was largely invisible to the general public and incomprehensible to most government officials who were responsible for implementing policies that actually served foreign rather than domestic interests. These same techniques continue operating in contemporary international finance through mechanisms that are far more sophisticated than anything that Max Warburg could have imagined, but that serve similar functions of transferring real political control from nominal government authorities to international financial networks that possess sufficient resources and coordination capabilities to influence government decision-making processes. The question that Max Warburg's success raises for contemporary politics is whether democratic government systems can maintain meaningful accountability to their citizens when sophisticated international networks possess the resources and coordination capabilities needed to influence government policies through financial pressure that operates largely outside public awareness or democratic oversight. The Russian Empire fell because its government officials couldn't understand or effectively respond to coordinated financial warfare that was systematically undermining their political authority while appearing to be normal international business activities. Contemporary governments face similar challenges from international financial networks that possess far greater resources and far more sophisticated techniques than were available to early 20th century financial institutions. Understanding how the Russian Empire was systematically destroyed through coordinated financial warfare isn't just historical curiosity, it's essential preparation for recognizing similar techniques that continue influencing contemporary political development through mechanisms that are designed to remain invisible to public awareness. The networks that were originally established for attacking Russian anti-Semitism have evolved into international political influence systems that now serve various objectives and interests, but that retain the fundamental characteristics that made them effective for destroying hostile government authority. Systematic coordination across multiple countries, sophisticated financial techniques that can influence government policies indirectly, and careful secrecy that prevents public awareness of how political influence actually operates. Whether such networks serve positive or negative functions in contemporary politics depends largely on whether their objectives align with the interests of the communities that are affected by their activities, but their existence and their influence over government policies is largely beyond the control of normal democratic processes. The success of Max Warburg's financial warfare against the Russian Empire demonstrated that coordinated international networks could achieve political objectives that were impossible for individual communities or even individual nation-states to accomplish independently. But success also demonstrated that such networks could operate largely outside the accountability mechanisms that are supposed to ensure that political power serves public rather than private interests. This tension between the effectiveness of international coordination and the accountability requirements of democratic governance has become one of the fundamental challenges of contemporary international politics. Sophisticated international networks can address global challenges that individual governments cannot manage independently, but their activities often operate beyond the oversight capabilities of the democratic institutions that are supposedly responsible for ensuring that political power serves public interests. The legacy of Max Warburg's systematic destruction of the Russian Empire includes both the positive demonstration that coordinated international action can eliminate systematic persecution and injustice, and the concerning demonstration that such coordination can operate through mechanisms that are largely beyond democratic accountability or public oversight. Modern international finance, contemporary global political coordination, and current international advocacy networks all reflect lessons that were learned from the systematic financial warfare that destroyed Russian imperial authority. These techniques have been adapted and expanded to address various challenges and serve various interests, but they retain the fundamental characteristics that made them effective for achieving political objectives through means that remain largely invisible to the communities that are affected by their activities. Whether we like it or not, the reality of contemporary international politics is substantially shaped by networks that trace their organizational methods and coordination techniques back to the financial warfare campaigns that Max Warburg pioneered for destroying anti-Semitic government authority. Understanding how those original campaigns operated is essential for understanding how contemporary international influence actually functions, regardless of what objectives such influence currently serves. The Russian Empire's collapse marked the beginning of a new era in international politics, where coordinated networks could systematically influence government policies across multiple countries in ways that individual citizens and even individual governments were largely powerless to understand or control. We continue living in that era today, but most citizens remain as unaware of how international political influence actually operates, as Russian government officials were unaware of the systematic financial warfare that was destroying their empire while appearing to be routine international business activities. So the question remains, in a world where sophisticated international networks possess the resources and coordination capabilities needed to influence government policies across multiple countries simultaneously, how can democratic institutions maintain meaningful accountability to the citizens they are supposed to represent? The story of how one Jewish family bankrupted the Russian Empire provides crucial insight into that question, because it demonstrates both the potential benefits and the potential dangers of international coordination that operates beyond the oversight of traditional democratic accountability mechanisms. Understanding this history doesn't provide simple answers to contemporary challenges, but it does provide the historical perspective that is essential for recognizing how international political influence actually operates in the modern world, and for developing appropriate responses to ensure that such influence serves public rather than private interests. The Russian Empire fell more than a century ago, but the techniques that destroyed it continue shaping contemporary international politics in ways that most people never recognize, understand, or have opportunities to influence through normal democratic processes. Share this video with anyone who wants to understand why international politics operates through mechanisms that seem disconnected from what ordinary citizens want or need, because when you understand how financial warfare actually works, you'll recognize similar patterns operating in contemporary international affairs. Thanks for watching, and I'll see you next week for another investigation into the hidden financial networks that have shaped our modern world in ways that most people never realize or understand.